All right, let's talk about something that makes most of us groan. Taxes. Especially in Nigeria, right? The word itself just sounds like stress. But what if it didn't have to be that way? In this explainer, we're going to pull back the curtain on personal taxes and actually show you how to flip that script, turning that end-of-year panic into, believe it or not, peace of mind.
You know the feeling, that panic. It pretty much hits like clockwork, doesn't it? It's a story that plays out for professionals all across Nigeria. Let's call it the Great December Tax Scramble.
This quote from our source material just nails it. The year starts to wind down, and suddenly that tax filing deadline doesn't feel so far away anymore. In fact, it feels very, very close.
Oh, I bet it does. That whole last-minute frenzy, trying to hunt down every single receipt, every invoice, every little proof of payment from the past year. It's this really stressful ritual that we seem to put ourselves through every single time. It's a special kind of chaos, isn't it? You're frantically digging through your email, trying to remember what you spent money on back in March, and all the while you're worried about getting hit with penalties. But you know what the biggest cost is? It's not even the stress. It's the cold, hard cash you lose by completely missing out on deductions you could have claimed.
Okay, so if we want to fix this whole scramble, we've got to go back to basics. What exactly are we dealing with when we talk about personal income tax in Nigeria? Let's break it all down. So here's a huge misconception a lot of people have. If you're a salaried worker, you'd probably see PAYE, that's pay as you earn, deducted from your paycheck and think, great, my taxes are done. But that's not the whole story. Not even close. You still need to file an annual return to account for everything else, and, just as important, to claim all your other deductions.
So how does it work? Well, Nigeria's tax system is progressive. That's just a fancy way of saying the more you earn, the higher your tax rate gets. It's tiered, so you're not paying that top rate on your entire income, just on the slice of it that falls into that highest bracket.
And this is absolutely crucial. The whole point isn't just to pay your taxes, it's to pay the right amount of tax. The system actually has reliefs and deductions built right in, specifically designed to lower the amount of your income that can be taxed. And this, right here, is where most people leave money on the table. Just think about your last year for a second. Did you contribute to your pension? Pay for life insurance? What about medical bills? Or maybe a professional course to up your skills? Even expenses for your side hustle can count. Every single one of these is a potential deduction that can shrink your tax bill. The real question is, are you keeping track of any of it?
And to make things more interesting, the whole landscape is changing. The proposed Nigeria Tax Act of 2025 is bringing in new rules, new categories, and while this creates new chances to save, it also means that keeping good records is no longer just a nice idea. It's absolutely essential.
I mean, look at this, for example. A brand new category for technology-driven services. This just shows you that the law is finally catching up to our modern economy. You know, fintech, freelancers, online businesses, the whole gig economy. If you're earning money in this space, tracking every single related expense is now mission critical.
And here it is, the heart of the matter, straight from the law itself. It's not enough to just say you had an expense. You have to claim it in writing, and you have to be ready to show documentary evidence. The short version, no receipt, no deduction. Simple as that.
The new law also messes with value-added tax, making things like baby products and medical devices exempt. Now, I know this is an income tax, but it proves a really important point. The financial rules are always changing, and if you're not tracking your finances carefully, you are guaranteed to miss out on savings just like these.
So, what happens if your records are a complete mess? Well, Section 29 of the new act is pretty blunt. If the tax authorities can't make heads or tails of your income from your records, they can just tax you under a presumption regime. In plain English, they'll just make an educated guess about what you owe. And let me tell you, that guess is probably not going to be in your favor.
Look, this isn't just some abstract problem. The financial cost of being disorganized is very, very real. Let's look at a quick story from our source material that makes this crystal clear.
So let's just be direct here. The biggest thing tripping most people up isn't really understanding every little detail of the tax code. Nope. It's the simple, boring, year-long habit of just keeping good records. So let me introduce you to Tunde. He's a marketing professional. And over the course of 1 year, he spent money on his mom's medical care, a professional certification, some charitable donations, and new gear for his photography side hustle. All of those things are deductible. The total value? A whopping 580,000 naira.
So, what was the bottom line? Because Tunde couldn't find the receipts for those expenses, he couldn't claim the deductions. The result? He ended up overpaying his taxes by more than 100,000 naira. Think about that. That's a huge financial loss caused by nothing more than misplaced pieces of paper.
Okay, we've laid out the problem, we've seen the high stakes. So what's the fix? How do we actually go from that December panic attack to a place of calm and control?
Well, the answer is a total shift in how you think about it. Instead of treating tax prep like this awful one-time event at the end of the year, you have to make it a simple, ongoing process. The source material points to digital tools that make this easier, like an app called Antimony, which is built for exactly this.
And this proactive way is actually really simple. You just record your transactions as they happen. We're talking maybe 2 minutes a day. You tag a potential deduction the second you spend the money. A quick review once a month keeps you on track. And then when tax season does roll around, your report is ready to go in literally seconds.
I mean, the difference is just night and day. You're swapping panic for preparation. You're trading rough guesses for proven facts. It's about going from stress and missed money to peace of mind and maximized savings. This isn't just about taxes. It's a total upgrade to your financial life. And modern tools make this so easy it's almost cheating. They have smart categorization that shows you where your money's going. A real-time dashboard means you always know where you stand. And when it's time to file, you can generate reports for your accountant with a single click. It's a game changer.
So let's just end with this thought. Tax season is a sure thing. It's coming every single year, like it or not. But the panic, the stress, and the overpaying, that part is a choice. The alternative is a simple habit that you can start today, one that gives you control and confidence for every year to come. The only question left is, which one are you going to choose?